Good evening. This side Rahul Magan here. Today I'm starting a new series on my YouTube channel, and this series would be Securities Law. But before somebody make out his or her mind, when I referring to the word securities law, I am referring to a concept. I'm not linking my videos with the rules and regulations of any country. Rather, I link my videos with a concept. Ladies and gentlemen, we need to agree with the fact that the most liquid market in the whole globe is the capital market. It is quite unfortunate that when we speak about capital market, we tend to believe that it is only and only a minuscule instrument. No. Capital market is a very big market, and the dimension of capital market is so big that it is beyond the life of a human being. Ladies and gentlemen, we have initial public offers, debt issuances, we have municipal securities, credit derivatives, hardcore structured derivative, securitization instrument. We have humongous amount of instruments whereby the valuation of the capital market is beyond estimation. Ladies and gentlemen, today I would be covering a critical piece of the capital market, and this being titled as the first video of our series. Now we are titling this as Securities Law. Now we all know that in different countries of the globe, the market is very liquid in nature. On the contrary, we have countries where market is not liquid in nature. We are holding the countries who are acting as an arbitrage taker. On the contrary, we hold the countries who are acting as arbitrage maker. I don't know whether you understand a deep concept known as arbitrage taker and arbitrage maker. Ladies and gentlemen, arbitrage taker means that when the four top currencies of the globe, which include USD, GBP, Euro, and Japanese yen, USD, GBP, Euro, and Japanese yen, when their central banks make any decision, either they cut the interest rate, they increase the interest rate, they give some guidance, they give some clarity, or probably they are giving their comment, or any way around, it creates an arbitration situation in the market. So let me give you an example. Today is 1st September 2024. If you open internet, you have different opinions about different people as far as the Fed interest rate is concerned. I completely regard all opinions because all opinion are based on some research. Time would tell whose research is correct, but it's hard to tell who is correct, who is wrong right now. I do have my own research on the Federal Reserve, but I'm not sharing in public. Similarly, when these central bank makes any decision, it creates arbitrage. Henceforth, they are arbitrage makers. On the contrary, emerging markets who take the feed from them, they are called arbitrage taker. Why they are called arbitrage taker? Because of an institution called foreign portfolio investors. Now, once again, when we listen foreign portfolio investors, we started believing in India. But ladies and gentlemen, foreign portfolio investor is a very big entity. Honestly speaking, foreign portfolio investor is a subject matter in itself. Let me tell you. And it is not only a subject matter, but also a very interesting subject matter. But it is quite unfortunate that we tend to believe that the foreign portfolio investor role in capital market is limited. No, ladies and gentlemen, they are the catalyst between arbitration arbitrage maker and arbitrage taker. This in itself is a concept, and I don't think in this short video I'm able to cover this concept. Now we all know that in capital market people raise money. Some people raise via initial public offer. Some people raise via follow-on public offers. Some raise via offer for sale, composite issues, debt issuances, warrant issuances, convertibles, and the list is very, very long. But having said that, one kind of investor play a very important role as far as the initial public offer is concerned. Rather, we need to appreciate the role played by these investors, and also these investors are taking risk as well. They are doing the complete due diligence and so on and so forth before investing in the IPO. Now, before I proceed further, let me remind that I'm not linking this video with any specific company or any specific country. This is a concept which I'm discussing. When people raise IPO, different countries of the globe have their different regulations, and like red herring prospectus, interviews, which is called book building, hard book building, soft book building, best effort book building, and the list is very long. Let me tell you this. But one kind of person who play a very active role is called anchor investor. An anchor investor is a person who enter just before the launch of the IPO. So let me go with my regular example, and I have once again taking indemnification that if this example turns true, basically the name turns true, then this is purely a coincidence. So Ramlal Cholip today is a very big setup, and this Ramlal Cholip today wanted to raise funds, 1200 crores, assuming hypothetically, and that company is based out Singapore or maybe different country, different any emerging market. Now, when they raise the IPO, they definitely need the approval of the regulator. In some countries, there is a capital market regulator. In some countries, there is a banking regulator. In India also, we have capital market regulator and banking regulator. But as far as the IPO is concerned, there is a catch. The catch is some countries require the approval of capital market regulator. On the contrary, some countries require the approval of banking regulator, or both. That depends. Ladies and gentlemen, very honestly, we need to agree with a very important fact, and that fact is the anchor investor invests just before the IPO, and they invest via a book building process. Now, that's a very technical thing because book building is generally done by the investment bankers. Some people use merchant banker also, but I always tend to disagree with this phenomena because I believe that investment, there is a fine line between investment banking and merchant banking, but I'm not entering into that. Now, anchor investor investing in a company just before the IPO, but they go via a book building route. Because actually there are two routes which they can go with. The first route is called the book building route. On the contrary, other route is called the fixed price issuance. Gone are the days when fixed price issuance used to happen, which means that who are you, what are you, you are investing one share, you are investing 200 shares, 2 lakh shares, 2 million shares, or 20 million share. It does hardly make any difference to me because I am going to sell my share at 100 rupees, $100, €100, £100, whatever per stock. But on the contrary, in book building, you will create a book and you will see that where is the benefit to you and your company. That is the first thing you see. And that benefit accrue to the fact that how efficiently you do the book building. But Ladies and gentlemen, in book building, the majority of the role is played by the investment banker and also the agreement between investment banker and the relevant company. We'll have a separate video in that regards. But anchor investor, like I said, anchor is a word which is very often used in the shipping industry. Anchor investor is a person who is giving a kind of guidance note to the investors that, see guys, I'm investing in that relevant company, but that guidance notes need to be scrutinized very carefully. Now, different countries of the globe have different regulations about anchor investor. Like many countries have their KYC of the anchor investor, that if an anchor investor is investing in XYZ company, then they need to have the complete beneficial ownership into picture, which is also known as last natural person, shortly known as LNP. On the contrary, we have many investors, many countries who do not want any ultimate beneficial owners of the anchor investor and the last natural person. They just uh, do what they wish to do. And there are countries who want anchor investor to set up trust, limited liability partnership, private limited companies, and so on and so forth. But to conclude a long discussion short, it is very important for us to understand what is an anchor investor and how exactly is anchor investor behaving. That's a very important piece of knowledge. But different countries of the globe have their different regulations, so we need to stick to that about anchor investor. But to conclude, the anchor investor is a person who invests just before the IPO. But like I said, that doesn't restrict anchor investor not to participate in follow-on public offers, not to participate in the debt issuances, and not to participate in the warrants or any other kind of convertible securities that company is actually launching or company is putting on the table. So anchor investor is a key, and that we need to understand. Once again, this is a concept. Ladies and gentlemen, thank you very much. This is Rahul Magan. You have my number 9899242978. 9899242978.